Hi, everybody. Thank you so much, and thank you for that introduction. I really appreciate, excuse me, you all being here today to find out how to analyze any stock in less than 30 seconds. So thanks so much for joining me. It'll be well worth it. Not only are we going to analyze your stocks, so start getting those ready, but we're also going to cover a few other things like when to sell and how to improve your portfolio results. So our focus, though, is definitely time, and because time is what everybody wants more of, right? Time to do the things you want to do. And you don't have to give up being a successful investor to get it. If you're not so successful, that's okay too. I'll show you how to fix that. I'm going to use again, the stocks that you guys suggest, so start getting those ready. And I'm actually really glad that I was able to join the event a little bit early and hear some of Michael's presentation. I really enjoyed it, and I think what I'm going to show you actually fits perfectly with it. So as was said, I'm an option trader myself, but I started trading stocks, and all of this information is applicable, whether you're short-term or long-term. First, though, I just want to tell you a little bit about VectorVest. We have a very long track record of helping independent investors, more than 26 years now, which is pretty extraordinary in this industry. One of the reasons we've been around so long is because we provide investors with something a little bit different. Instead of just raw data, we provide information in the form of specific indicators that will help you analyze your stocks at a glance. And these indicators focus on what we feel the critical information is that every investor should know before ever considering a stock for their portfolio. And that's what a stock is really worth, how safe it is, and whether to buy, sell, or hold, and when to do that. So I'm going to show you how to do all those things. And before we get to it, I do want to stress that one of the core beliefs that VectorVest has is that you should only buy stocks in a rising market, sell stocks in a falling market. Now that can mean just protect profits and go into cash, or it can mean actually take advantage of the bearish side of the market, go short, or use some of the bearish option strategies to take advantage of that downside. But we're never fighting the market at VectorVest. We're making the trend our friend. So let's go ahead and jump into the program, and we'll start building that list of stocks. Go ahead and start sending your ticker symbols over, and I'm just going to point out real quick while you start sending your ticker symbols that we do have this color guard on the front page, and this is what's going to let you know whether you just want to be getting your shopping list ready and not actually buying stocks, or whether it's okay to buy. And you see all those red lights. That's basically a traffic signal for the market. So it's telling you stop, don't buy right now. But we can look, right? We can window shop. So let's go over to our viewers and go ahead and go to my watch list, and we'll start a new one here. All right. Okay, and I see you guys have already sent a bunch of stocks over. I'll try to type these in as fast as I possibly can. Also, since VectorVest does cover 6 different countries, but we're in the U.S. right now, so please just give me U.S. stocks. And let me just get down to the right place that I need. Aha, okay. We've got GMCR, Apple, Calmaine. Just keep typing them, and I'll get to as many as I possibly can. Oops, Monster is MNST. Someone wants Facebook and Alibaba, of course. Don't have a whole lot of information on that one, but we have a little. Okay. 3M. Chris wants Lake. GP. Oops. Okay, we'll put these in so far. And let's see, we've got about 29. I'll type in a few more. GoPro. Just heard Kramer talking about that one. Best Buy and oops. Okay, I think that'll give us enough to work with. Don't worry, if you guys stick to the end, you're going to get a very special offer that allows you to analyze all the stocks that you want. But first, what we're seeing here, I just want to make it clear that this is not a random list. As I put these stocks in, they were instantly organized so that the best stocks, the highest quality stocks, came to the top, and the lowest quality went to the bottom. And that's because we have an indicator here, VST, value, safety, timing, that combines value, safety, and timing and puts the stocks with the highest combinations at the top of the list. So I'm going to start analyzing these, and of course I won't be able to get to all 40 stocks, so what I want you to do is find your stock in the list as I'm telling you what these indicators mean, and you'll be able to know what those levels are for your particular stock. We're also going to sort this list a couple of different ways, so if you don't see your list on that first screen, don't worry, we'll have a chance to pick up on it. Cal-Maine, so that's our top stock. It traded at $94.44. It's currently worth, though, $129.77. So that's what the stock is really worth, not what it will be worth in future, though, and that's a pretty important distinction. This is based on profitability, earnings, interest rates, and inflation, as well as growth. And it's what the company is worth right now, as opposed to what it could be worth in a few years. And we do have an indicator that analyzes the future prospects of that company, and that's going to be right beside it, relative value. So what it's worth now, what it could be worth in future. Relative value, that RV indicator, along with the rest of the indicators that we're going to go over, are on a 0 to 2 scale. So above 1 is favorable and below 1 is unfavorable. The higher the better. With relative value, it's telling us specifically the long-term price appreciation potential for this particular stock and whether it's likely to outperform a AAA corporate bond over the next 1 to 3 years, and by how much. So at 1.53 on that 0 to 2 scale, Cal-Maine's future prospects are excellent, and it's likely, to outperform a AAA corporate bond by 53%, that 1.53, over the next 1 to 3 years. Now, the biggest difference between the value, the current worth, and the future worth is going to be the growth rate. So we're looking at a stock that is already making money. It's making $6 a share if you look to the right where EPS is, and it's growing those earnings at 24% per year. Scrolling a little bit further to the right, you can also see it has a pretty low PE ratio, so it's not trading for extraordinarily high right now, so its price to value ratio is not bad at all. It's got a PE of 15.5. So we're paying $15 for each dollar of earnings. So that put Cal-Maine at the top of our list as far as relative value goes. And then relative safety is going to be next. So in order for those future prospects to be realized, a company needs safe, predictable earnings. So we measure that by looking at the long-term history of a company's financial consistency. And if that company is able to make money year after year, year in and year out, raise their earnings, then it has a higher relative safety than average. Now, this indicator also includes other financial indicators that you'll find on the balance sheets. You'll find the debt to equity ratio included in here. You'll find the sales business longevity, how long the company has been in business, is included in the safety factor, as well as volatility, which measures really what investors feel about that stock. Obviously, stocks that have investor confidence, those are the stocks that you see that are generally moving up higher and higher. So we want to pay attention to that relative safety score just as much as we want to pay attention to the relative value score. Next to that, we have timing. So we've covered the fundamentals, looking for good quality stocks. Now we want to cover the timing aspect and decide whether it's really the right time to get into this particular position. Relative timing, also on that 0 to 2 scale, looks at a stock's not only performance but momentum as well, and it's looking at it over 4 different points in time: day, week over week, quarter over quarter, and year over year. So if that indicator, relative timing, is above, then the stock is in an uptrend, at least for the short term. The higher above wanted, we're getting into momentum. So the higher above wanted is, the faster that particular stock is moving. So if this were at 1.9, let's say, you would see practically straight line on the chart where Calmain is going up in price. At 1.5, it's not exactly a slouch. It's going up at a pretty good pace. But we'll take a look at some graphs as well and see if that actually strengthening or weakening. Now, three combined give us a VST of 1.47, and that VST is a weighted formula. So it's not just taking those 3 indicators that I mentioned and weighing them equally, in the most weight to relative timing. So you technical analysts out there will be hear that. You think that price is more important than anything else, and so do we. Price movement is going to make or break factor when you're investing in a stock. But it's a lot easier to make money consistently on good quality stocks than bad quality stocks. At least that's what I've found, and certainly what we've found overall in our 26 years. So that's what we encourage. Now, each is a buy, sell, or hold recommendation, and I want you to think of this as an adjective, not a verb. So these are rule-based recommendations. There's no one at VectorVest, no analyst in the back room saying, oh, you know, I think this stock has got good prospects. Let's go ahead and give it a buy. This is simply rule-based, completely objective. So in order to get a buy recommendation, the stock has to be above its stop price to the right. It also has to have a VST above 1 to ensure some minimum fundamental strength. It has to have an RT above 1 to ensure that it's already moving up, and it has to be pulling away from its stop price. So just another little measure to ensure that the stock is already moving the direction we want it to go. Just like we're not fighting the market, we're not fighting a stock's trend either. We're not trying to catch a falling knife. And in that way, we end up with more winners, fewer losers, and bigger winners. So let's go to the next one. We have Gilead Science. That one's trading at 106, but the value is $202. So that is very undervalued as far as the current value goes. Relative value, even higher. I thought Calmain was the highest, but Gilead Science has even more growth prospects. You can see that a lot of times with these drug companies, they can have some extraordinary future prospects. Relative safety, this is where a lot of drug companies fall down, and they're not exactly the most predictable as far as their earnings, but Gilead Science is not one of those. It's got very strong track record as far as the financial goes, and that gives it a high relative safety, excellent range of 1.45. Relative timing, it's kind of fizzled out though. You can see that that indicator is still above 1. It's still officially in an uptrend, but it's pretty close to that 1.0 line, which means it's not really going anywhere fast. It has a total VST, or a composite indicator, of 1.47, which is actually identical to Calmain. Just went to alphabetical after that, and it does have a buy recommendation. Now let's skip down a little bit so that other people get to see their stocks. Go to that mid-range. Let's see, we have, let's do Travelers. Travelers closed at $93.91, but currently worth $126.50. Its long-term price appreciation potential is excellent at 1.4. It should outperform a AAA corporate bond by 40% over the next 1 to 3 years. And relative safety is very high. It's in the excellent range as well at 1.39, so they're doing a great job on earnings. Relative timing, we're looking at about the same as Gilead here, and we're going to see this a lot because the market is not going up. So when the market's not going up, the market's made up of individual stocks. Any direction the market's going, it's because a stampede of stocks are going the same way. So a lot of these stocks that we're looking at are not going to be in flying up trends. They're going to be maybe just hanging on, maybe even in some downtrends. VST on this as a composite is 1.29, and it's currently got a hold recommendation. Let's see, we've got 3M down here. Let's go to that one. $138. Value is 156. Relative value, long-term price appreciation potential, not as high as we've seen with some of the others. That one's at 1.21. Relative safety, great financial track record of 1.4, but it's currently in a downtrend at 0.92. So below 1, unfavorable. Above 1, favorable. It's really as simple as that. We've got a stop price. Since this is in a downtrend, it's good to know that the stop price is 131.68. So that's kind of our line in the sand. If 3M drops below that line, we're going to go ahead and mark it as a sell recommendation. And depending on what your position is in that particular stock, you can choose to sell, or you might take some other defensive action, like with options, as you learned in the previous talk. I know somebody mentioned GoPro, and I was just recently, I watched Kramer, of course, and I was adding the stocks he likes into a watch list just to see what VectorVest thought of them. And it was interesting, almost all of the stocks that he liked showed fundamental strength using the RV and RS indicators. So if you don't have VectorVest, you can actually go out. There's a lot of free information online. Look at earnings. Look at a long-term graph of earnings. Look at the earnings growth rate and the earnings yield. What are you currently getting? What are you paying for those earnings with the PE ratio? Buying quality stocks absolutely matters in your win versus losers ratio. So GoPro trading at $89, and this is a really interesting one because even though it's trading at $89 and even though we have the current value is only $14, it still has a buy recommendation. And that's because the rules for a buy recommendation are still being met. So to refresh your memory on that, it has nothing to do with value. It has nothing to do with safety. What it does have to do with is the price of the stock has to be above the stop price, which is $66, so it's well above that. It has to have a VST above 1. It does. It has a VST of 1.22. The relative timing has to be above 1. It's at 1.73, which means this stock is flying. And the price has to be pulling away from the stop price. So we'll go ahead and see that on a graph. I'm going to click on GoPro and graph it. Give me 1 second to pull the graph over. It showed up on my other screen. Okay then. There we go. Okay. So yeah, GoPro is in a very nice uptrend. What I have on the screen for you is what we call VectorVest Simple. And we want to look for, when we're getting into these stocks, not only do we want to check out their indicators and analyze their fundamentals and their technicals, but we want to see what picture they present. Because even though these stocks may be strong stocks that really are valuable in the long term, we need to be able to hang on to them. And if a stock is volatile, if it's having dramatic price swings, it's unlikely that we'll actually be able to do that. So we want to check this out, and we want to see, as far as VectorVest's philosophy, we want to see a steady price pattern from lower left to upper right, going as smoothly as possible. We want the relative timing, that momentum indicator, to be holding steady or rising. And we want the earnings to also be rising consistently over the last year. Now, for GoPro, we don't have quite a year. It's a newer stock, so it's from July of 2014 to October. But so far, so good. It is rising steadily. Earnings are rising, and momentum is pulling back a little bit right now because most likely the market's trend, but it's still at a healthy level. It's still 1.7 as we saw, so it's going up nicely. Now let's take a look at a few of these others down towards the bottom. We've got Staples down there trading at $11.75, worth $10.41. So you're paying a premium for that. Good to know. Doesn't mean you have to avoid the stock if it's trading for higher than its value, but it's something that you want to go into with your eyes wide open. And that's what that indicator is there for. As far as its future prospects, they're not looking so great. The AAA corporate bond looks like it's going to be a better return on investment over the next 1 to 3 years unless something turns around for Staples. The relative safety is just above average. It's at 1.14, so it's at a fair level. And relative timing, it is in a downtrend. And because it's still above its stop price but not meeting all the rules for a buy, it's got a hold recommendation right now. And you can check out some of these others as well. If you ever want to kind of refresher on what all that information means, you can right-click on the stock and choose to get a full stock analysis report. And that's going to give you a definition of each one of those indicators on your particular stock. So we've got relative timing, VST, the recommendation, all the different rules. And for you dividend investors, you're going to see a dividend analysis, etc. So let's go over some ways to manage your portfolio a little faster. One of the nice things about this ranking is that if we own these stocks, we can click on relative timing, and that will put the stocks that are making us money the fastest at the top of our list. We don't want to mess with those. Even if they're not sound fundamentally, maybe they're not long-term holdings, they're making us money, we're going to keep them until they stop. What we really need to do is work on the bottom of the list. These are the stocks that are heading down, they're dragging our portfolio down, and they're losing us money. So Best Buy is at the very bottom of that list. It's trading at $30.86. It is undervalued, it's worth $47, but that doesn't matter if it's losing us money. Its future prospects actually look great. It's got an excellent relative value of 1.46. Its safety, that's about average at 0.98, so it's just slightly below that 1.0 level. And relative timing, that's the killer right there. It's in a downtrend. So it's at 0.83, collective VST at 1.09, and has a hold recommendation. Let's take a look at that one. So with Best Buy, you can see up at the top I have a recommendation bar. This is just a graphical representation of those BSH letters that you see in the stock viewer. And you can see it got a sell recommendation right up here before it got into trouble. And that sell recommendation kept you out until it got a buy recommendation right at this point right here. And you can see that that wasn't a bad place to enter this particular position. However, if you were trying to follow what VectorVest says to do as far as consistently picking winning stocks, this stock did not have a steady rising pattern from left to right. It did not have rising momentum. In fact, momentum had been falling since it peaked at this beginning of this one-year graph period that we're looking at. So it had been falling off. And earnings per share, while earlier in the year they were rising, had slammed downward. So at this point in time, there are probably better prospects for you to look at. You can go right on down the list. Since it has risen in this period right here, I just want to zoom in and show you that relative timing once again has been moving down, even though the stock price was moving up. So that's a bearish divergence. It warns you to keep your eye on that particular stock, that a downtrend or a pullback in price might not be that far away. So it can always turn into nothing. A stock can recover, pick up momentum again, but you don't want to get into a stock that's losing momentum, and you really want to watch carefully a stock that you're into that you see that downward momentum building up. So let's close out of this, and I will take a large group of these and go through the graphs with you, and we'll talk about those different points that you want to consider selling a stock, along with what you would like for your portfolio. Now, this first one here, Lake, let me turn this off for now, give us a little bit more room on the graph. Is this steadily rising from left to right? The answer is no, right? It's definitely not rising in a smooth, consistent pattern. It shot up over this last few days, but until that point, kind of wandered up, went flat for a while, wandered down. No real consistent, smooth, steady pattern from that. Relative timing, of course, is building up because, man, it just parabolic, straight up rise, which is bound to make most investors nervous. It would certainly make me nervous. So I would not want to enter this position. Earnings look horrible, right? They're negative. They managed to go positive for just a little bit, and now they're back into the red again. So doesn't fit the rules at all. Let's go to this next one. This is GoPro. We looked at this a little bit earlier. On the stock viewer, we have a nice rising pattern. We can't see for the last year, so this would be pretty speculative at this point. We know it's also trading at a very, very high premium right now. Relative timing has been going up since its inception, but it's starting to pull back a little bit. Now remember, we're seeing red lights for the market. We don't want to buy anything right now, so I'm not going to hold this little pullback against GoPro as far as that's concerned. Earnings are nice right now, and we really just need to see it go through a few earnings quarters to see if it can actually maintain profitability there. CalMaine was our very top VST stock. It definitely exhibits that smooth left-to-right pattern in price. We've got, just to point out here, a 40-day moving average on the chart, and that also makes a nice line in the sand. So the stop price is pretty generous. VectorVest uses a 13-week moving average that's actually adjusted for the fundamentals of the stock. But this 40-day moving average, you notice how many times the stock kind of bounces off that level as support and then keeps on going. So it can make a good point to enter the position at a great price and also have a fairly close point where you can exit that stock if the trend continues to, it doesn't manage to take off. Looking at relative timing, while it's not quite as high as it was back a few months ago, it's still doing really well, actually, and over the last few months, it's been building up. This stock has also resisted a recent downturn. Earnings look absolutely fantastic. They meet that steady stair-stepping pattern. Just to let you know as well, that earnings is a one-year projection based on historic, current, as well as analysts. In coffee, someone had given me this one, left to right. We have a lot of gaps in this one, which may make some investors nervous. At least for the most part, there are gaps to the upside. But the stock has been rising steadily. Relative timing has been stayed fairly low for most of the year, but it has been above that 1.0, and it hasn't suffered any serious setbacks except when we had a little market correction. Earnings look absolutely fantastic. Go to the next one, Monster Average, and we've got relative timing holding steady right here. We had a big gap up. Stock is rising from that point, even though it had that huge gap, and earnings look absolutely fantastic. Next one, Apple. Here we have an interesting divergence. So we have Apple hitting a new high at the point where my cursor is, and we have relative timing steadily going down from that point, even though the stock has not been trending down. So that's one of those bearish divergences again, where we really need to pay attention to the stock if it's in our portfolio, and just keep a tight stop loss, tighten our stops so that if it does start going against us, it's fairly minimal to zero damage on our portfolio. Notice as the further down we go, the sketch charts. So here is Yahoo. And this one definitely does not fit that smooth, steady pattern. Relative timing has been below 1 for a lot of the year, as much below 1 as it has been above 1. Recently, it's been trending down. The stock's pulled back as well. And why is that? Well, it might be because the earnings down at the bottom be pretty sketchy. UNP, this is perfect. Boy, Relmine has absolutely fantastic all year. The momentum for the stock is held steady, even though it's costing invest more and more money to buy this particular position. You can see that at any point in time, you know, if buying new highs makes you a little bit nervous, you could have said, well, it's too high right there. But it wasn't. It went higher. And here you could have said, well, it's too high right there. It's got to come down. But it didn't. It went high, and so on and so on. Stocks that are making new highs tend to keep making new highs because they're doing what investors want to do. They're going up and they're making the money. And so even if there's some profit taking or a dip in the market causing the stock to pull back, investors tend to return to those stocks because they know they made money in them and they want to make money in, of course, that you have good quality stocks as well. So just going over a few ways to know how to sell, let me go into some stocks that have gotten people in trouble before. Okay, so we've got Ford. Ford's a pretty popular candidate. Let me take off the earnings and just focus on relative timing here. So one of the things that you can do is just look at that price chart, and if it's a volatile price and you're not aggressive or speculative trader, just pass it by, because what you see is what you're going to get. So if you see this and you're buying here, you're almost ensuring yourself a loss because you've probably got a pretty tight loss on that. If it's a volatile price pattern, just pass it by. Unpredictable equals unpredictable profits. That second, that 40-day move, that's going to make a nice exit point as well. So think of this as a zone, not an exact price point. So you have to sell immediately as soon as it crosses that line. But let's say you have, hey, it's 2 bars underneath that line, 2 days, down day, underneath the 40-day moving average. I'm going to close my position. That's a very reasonable rule. Now, had you done that right here, you might have been kicking yourself, because right after you sold it, as always seems to be the case according to people that talk to me, it immediately starts rising. And so you get back in and you talk yourself out of selling when it drops below that moving average again. 2 bars under, right there. And what happens? It drops from $17 to $13 in a matter of a couple of weeks. So don't second guess yourself. Go ahead and lay out your rules. Make sense, of course, and we're giving you some that definitely make sense, and then stick with them and don't look back. So 40-day moving average and price volatility, those are 2 things that you can look at as far as knowing when to sell. A third is going to be looking at that relative timing. Let's look at another example here. When the relative timing crosses below 1, you can also use that as your signal to exit. So here we have below 1, and at that point in time, looks like it hasn't gone down too much further since then. Cisco was at $25 when our relative timing crossed below 1, and now it's at 4. Still time to get out at that one, fairly unscathed. But you do see a very significant, before any of this drop has occurred, you see a fairly significant pullback in its momentum. So even though it's hitting a new high, it gapped up, it's shown, you know, incredible price pattern, at least so you would think. The relative timing is say, hey, wait a minute, watch out here. So I hope that you've picked up a few tips from this. Of course, the final way to know when to sell is just following that sell recommendation. For example, with China, what is that, China distance? When it gets a sell, don't make excuses. That's kind of your last defense. Go ahead and get out of the position. If it's still going to make you money, you can get right back in. You can get in at a slightly higher price, and it's a fraction of what it would cost you if that stock goes against you to a large degree, like say from $30 all the way down to $13. So let me show you. I know I didn't get to every single stock, but let me show you how you can analyze your stocks, as many as you want. You can analyze your friends' stocks as well. We're going to give you 10 weeks of full access to VectorVest intraday, which is a 15-minute delay feed, updated continuously throughout the day. It's just 15 minutes behind. You're going to have, with that, unlimited stock analysis. You're going to have daily market timing guidance. We put out a video every night that tells you what's going on in the market and what strategies you want to use to take advantage of that and make money. You're going to have the charts, beautiful charts. We have over 200 different stock scans pre-built, ready to go for every investment style, from aggressive to income investing. Watch lists, you can create your own, of course, or you can go ahead and use one of our pre-built ones. You can test us historically, your ideas or our ideas, see how it turned out. We have a special tool for you to do that. And you can also test us in real time, because we give you a little tool during your trial called Auto Timer. And it's an add-on to our program, but it incorporates the market timing signals that we give. And we have a few different types of signals that you can choose from. You can see how much better your results would be if you had incorporated market timing into your trading plan. And again, that can be historically, or it can be going forward in paper portfolios. So you don't have to risk a dime. You can have fully automated trading and know exactly how VectorVest performs. Value of that is $220. We're also going to give you group coaching. This is live coaching. It happens once a week, and it's so we can fast track your success. We're going to give you tips, techniques. We're going to tell you what strategies are best for this market. We even go over some option strategies, actually. And we're going to go over something we call surefire success trading systems, which are systems, complete trading systems that we've tested, that we trade in real time, that have had incredible long-term performance since 2007 to current, consistently making money. Those coaching sessions, they're a $380 value, and you get it all for $29. So we just want to kind of weed out the looky-loos, people that are, serious about trying this program out and seeing that it makes a difference in their investing. And so we have that for the next 24 hours. You just go to VectorVest.com/inspired, and I think the most important, best part is that you have a 30-day, 100% money-back guarantee. So if VectorVest isn't the absolute best program that you've ever tried for making money in the stock market, then all you have to do is call us within 30 days, and we'll give you your money back 100% right away. So we don't play any games with you. We're in business for 26 years. We just couldn't do that if we didn't treat our customers right. So we know that you're going to love this, and that's why we feel confident in putting that offer out there. So go ahead and go to VectorVest.com/inspired if you want to take advantage of that. If you're not ready to do that, you can go to our website, VectorVest.com. You can get up to 9 free analysis reports. We'll email you 3 a day up to your 9 reports. And you can get that report that I showed you that's going to break down all of those VectorVest indicators. I would like to thank you so much for having me and joining me. This is just the tip of the iceberg, so I hope you take advantage of our offer.